Hi there traders, this is FxExplained and this is another Master Academy with Steve Miley. So welcome everyone. So this is going to be the first in a short series of videos, just 2 videos in here on chart patterns. And we're going to look at reversal patterns in this first of the 2 series, chart patterns 1 and 2, starting with reversal patterns. So a chart pattern is a distinct formation on a chart that signals potential for future price movements. Technical analysts use these patterns to identify current trends, trend reversals, and for buying and selling signals. So there are 2 types of patterns, reversal patterns and continuation patterns. And in this video, we're going to be looking at reversal patterns. So a reversal pattern signals that a prior trend will reverse upon completion of the pattern. So reversal patterns would include double tops and triple tops, triple bottoms and double bottoms, head and shoulders tops and inverse head and shoulders bottoms. So first of all, we're going to start by taking a look at double tops and triple tops and double bottoms and triple bottoms. And first of all, starting off with double tops. These patterns are formed after a sustained trend, an uptrend in the case of a double top or triple top, and a downtrend in the case of a triple top or triple bottom. And they signal that the trend is about to reverse. These patterns are created when price tests resistance or supports 2 or 3 times but cannot break through. These are double tops, triple tops, and bottoms. A bottom is completed when price moves above the interim peak for a double or triple bottom, and a top is completed when price moves below the interim low for a double top or a triple top. A price target is then calculated by measuring the distance between the peaks or the troughs and the interim level projected from the breakout level. And the price target is called the MPO, or minimum price objective. And it's easier now if we take a look. So you can see the market is in a downtrend in here. We're in a primary downtrend, and the market then makes 2 lows around or at the same price. And then when the market moves above the high between these 2 lows, this high here, the break here then signals a completion of a double bottom. We have 2 lows, and here is the interim high. So that is a double bottom completed, and then the market moves higher. And this distance here, the distance measured between the lows and this interim peak, is then projected up from this level here, the breakout level, and that gives us our MPO, our target level. And here we see it with a real life example for Euro versus Pound, EUR GBP. The market was in a primary downtrend. We then get lows put in at the same levels down here. And here is the interim high. You could argue there's actually 3 lows here, that it's a triple bottom. But here's the interim high, and it's only when the market moves through here, and you can see we do get quite an impulsive break up through this level, then that signals the double bottom, or in this case triple bottom, you could argue, is completed. And then the market then moves higher and reverses. The minimum price objective is this distance here between the lows and the peak. So this distance here represented by the green arrow, and then this is the minimum price objective, the aiming up here, and you can see the market hits that minimum price objective. A double top is the opposite. The market's in an uptrend, so we have a primary uptrend. We get 2 highs around or at the same level, and we have a low between those highs. So here are the 2 highs, the low between the highs, and then this distance here gives us our minimum price objective. When the market breaks through the low here, at this point here, the double top completes, and then we have the minimum price objective is this distance here, extrapolated, projected lower. This will be our target level. And here we see a real life example. So the 1 hour chart for pound versus yen, GBP, JPY. You can see the 2 highs at pretty much the same level here. Here's the interim low, the low between the 2 highs. The double top completes when the market breaks down at this point here with this impulsive breakdown through this low. Then we get the measure, the distance from the highs to the low. This distance, this vertical distance, measured from the breakout point here This gives us our MPO, our minimum price objective. You can see get an impulsive break to complete the double top, and then the market moves lower to hit the minimum price objective. Now we're going to take a look at head and shoulders patterns and inverse head and shoulders patterns. So a head and shoulders, or an inverse head and shoulders, a head and shoulders top is a bearish reversal pattern. The head and shoulders tops contains 3 successive highs or peaks. The middle peak, which is the head, is the highest point of these, and the 2 outside peaks, the shoulders, should be lower than the middle peak, the head, and roughly of equal height. The reaction or swing lows from each peak are connected to form what we call the neckline to the head. And the neckline can slope either up, downwards, or be horizontal. If the neckline is broken, the head and shoulders top pattern is complete and the uptrend is then reversed. Now the MPO, the minimum price objective for the head and shoulders top, is the height of the head down to the neckline and then projected down from the breakout when we break the neckline. And it's easier if we look at the example here. So we have the 3 peaks, the left shoulder, the head, and the right shoulder. The head is the highest of the 3 peaks, and the left and right shoulder are around the same height. Here we have a horizontal neckline drawn between these 2 lows here and here that form the head, the 2 lows that form the head. And then when the market breaks the neckline, the head and shoulders top is completed. And then this distance here, the horizontal distance from the head to the neckline, projected down from the breakout point through the neckline, then gives us our MPO. This will be our MPO, our minimum price objective. And here we can see a real life example of a head and shoulders top. We have the left shoulder here, the head and the right shoulder. The left and right shoulders are around the same height. Here's the distance at the head. We get an impulsive break as we break down through the neckline. Remember the neckline drawn between these 2 lows. And this red arrow, the distance here, is then the projected distance lower to give us our MPO, our minimum price objective. The trend then reverses to hit the minimum price objective. This is an example on a daily US dollar Canadian dollar chart. The inverse head and shoulders is just the opposite rules applying for the head and shoulders pattern. So here we have the market in a downtrend. We have 3 successive lows, and these lows now form the left and right shoulders around the same height, with the the lowest of the lows in here being the middle one, which is the head. The distance from the head to the neckline being drawn between the 2 points that make up the head, between the 2 shoulders. And then this distance here is our projected MPO target, minimum price objective here. And then when the market breaks the neckline, then the inverse head and shoulders bottom pattern is complete. So in the first of a series of 2 videos on patterns, we've taken a look at reversal patterns, focusing on double and triple tops, double and triple bottoms, head and shoulders tops, and also inverse head and shoulders bottoms. This has been Steve Miley with another Master Academy for FX Explained. Join me again soon. If you have any questions about this article or this video, please leave a comment below and I'll come back to you.